don't ever believe anything that comes from a government official.
Yeah.
That's rule number one. But of course, the Fed, in order to maintain some degree of credibility, most of their credibility has been lost already, but to maintain some credibility, they have to increase rates to a level where they can pretend that they're actually fighting inflation. It's not very clear how they fight inflation, because inflation can occur in building prices like the home prices, or it can occur in commodities, or it can occur in stocks, or in bonds, or in wages. So far, what increase in interest rates has done is to reward wealthy people to some extent, including myself. You take my portfolio, which has maybe 15-20% of its money in cash. 2 years ago, I didn't get anything on my cash, and now I can place money for 1 year at over 6% interest. So some people have actually benefited from the increase in interest rates, and the people that are hurt are the people that are poor and therefore have large credit card balances. They have large home loans, mortgages, student loans, consumer loans, and so forth. And all these loans, the cost of these loans has all gone up meaningfully, not little. And number two, that is good, the one that is hurting in the long run the most is the government, because they have huge debts. And whereas a clever treasurer of a company, when interest rates were artificially low, would have borrowed at, say, 1-2% for 30 years, Miss Janet Yellen, the Secretary of the Treasury, continued to borrow short-term in 2020, 2021, when interest rates were lower than ever in the history of the United States. So it shows what the skill is of these government officials. It's a complete disaster, but that we've known. Whatever the government does is worse than what the private sector does. It's nothing new. But what I want to say is that now the interest on the government debt in the US is exploding, and it will continue to go up. By next year, I think it will be over $1 trillion, the interest alone on the debt.
That's crazy.
And soon it will be also in Japan. That the US is not unique in that respect. All the governments are in the same position. But what I want to show is some people benefit from rising interest rates and others are hurt. But to believe that you can look at the level of interest rates and conclude that money is tight, or the money supply is expansionary is oversimplistic. You could have interest rates like in Turkey and Argentina at, say, 80%, and inflation would be 85%, and that would be an inflationary condition. You could have interest rates at 2%, and if you have no inflation at all or deflation, it's tight monetary policy. You can observe whether money is tight or not at the level of speculation. We had recently again huge speculation in American shares and in cryptocurrencies and also some commodities, where in some instances stocks shoot up by 50% in one day. When money is tight, this doesn't happen.
Right.
And Goldman Sachs has a financial index which indicates, is money tightening or is money loosening, and are credit conditions improving. This index has been declining. In other words, the liquidity conditions have been improving.
So with liquidity conditions improving, then just like what you were saying, you'll have stocks that will go 50% up out of nowhere. What happens to precious metals as this recession starts to heat up? Or like, let's say going to 2024, what do you see happening to gold and silver?
Yes, this is a very good question. But I'd like to mention that just in the last few days, it looks as if finally interest rates begin to have a mild impact on asset prices, because as interest rates rose, the rate of inflation came down somewhat. The rate of price increases has nothing to do with monetary policy. That's just to do with a demand destruction. As prices went up, households had to cut down on their expenditures. And so it is possible that from now on, the interest rates may hurt business somewhat. But the impact on precious metals, I would describe as follows. In my view, the Fed will one day overdo its interest rate increases because, as I just described, say in a population, you have 0.1% of super rich people. They benefit from the mild interest rate increases we had in real terms. The wide public, say 80% of the population, is hurt by rising interest rates because they have net debt. And most companies have net debt. Some companies have net cash. They benefit from rising interest rates, but the net debtors, they are hurt. So at some point, the majority of households have a problem in their spending patterns because the purchasing power of the money they earn is going down. So they cut down on spending, and that will have then the impact to destroy demand. Then prices tend to ease. And at that stage, there was a strategist of Double Line, which is a fund management company, and he said that the Fed suddenly will have to cut interest rates, not by 0.25%, but by 1%.
Wow.
And in rapid succession, because the economy will deteriorate so much. When that happens, the dollar will tumble. And gold and silver and platinum will go ballistic. They haven't gone ballistic yet because the dollar is strong. And the dollar is strong, or relatively strong, because the interest rates in America, say the 10 years treasury bond in America yields 4%. In Japan is now still 0.59% for a 10 years government bond. It's crazy, this difference. Even in Thailand, government bonds have a lower yield than in America.
Wow.
So the relatively, and as I told you, I can put my money at 6% on deposit in US dollars. For me, 6% per annum, no matter what happens, is enough.
Yeah, that's really good.
Yeah, it's good.
Yeah, that's really good.
But I still buy gold because I'm a believer in gold. It's not that I abandon gold and sell it and put my money in 6%. I have a large cash flow because I'm a dividend stock investor and I have fixed interest securities. But 6% for me in the current environment is wonderful.
Yeah, it's way better than the uncertainties in the market.
Yeah, on my $1 billion at 6%, I make $6 billion.
Yeah, that's incredible.
I don't know how to spend it all. I have to buy you a private plane.
Yes, I'll take it. And what else is really concerning you, Dr. Faber, with everything that's happening in the United States and Europe, other than just the economy? Like, are they introducing a CBDC? Will it work in America, or will people just fight back because of privacy? What do you think there?
The government, the way I see it, they could force people to lock down. They can force the people to use a certain currency. Say they can issue a crypto and print money and so forth, and they can ban or declare as illegal other cryptocurrencies and so forth. These are all things they can do. Now, if you live in a small village or a small town and you have a butcher that you know, you can go to the butcher and say, look, I buy meat from you and I can pay you in goods or services and so forth. I'm an electrician. I can look after your electricity requirements in your butcher shop and in your private home. So barter comes up, or coins are coming back, like silver coins and gold coins and so forth. So all these things, we don't know exactly how they will play out. But one thing I can say is paper money will at some point sort of disappear because people will realize that a dollar today will be worth less in 2 years, in 5 years, 10 years time, as it has been in the past. If you look at your grandparents and at your parents, what they could buy for $1,
yeah, lots.
And what you can buy today is unbelievable. Just watch some old movies from the 1920s or 1930s. Occasionally they show a street and advertisings of room rates. You could have a hotel in New York City for $1 a night.
Wow.
That was already quite luxurious. For 25 cents, you got a cheap hotel.